Welcome to TradeTheMBI.com. This is John. This report is for the 24th of July, getting ready to head back to Europe in another couple of days. On Wednesday, supposed to head back. However, had issues getting the renewal of Isabel's passport, so don't know what's going to happen with that. Anyway, the market's doing pretty much the same thing, the slow ebb up. We are seeing a little bit of a troubling spike here in the orange. If that gets above that 13.5, then we would be looking at a little bit higher probability of a significant turn down. Secondarily, we already have the steel below cyan and um, green as well fading below. The question mark then becomes the red, and you can already see that the cyan right here at 0.62 is above the red at 0.5. So that's a full switch from the long side. Will it result in a dramatic move? We had a little bit of overbought develop back down here. A little hard to see the increase the extreme histogram right there. We had some movement in the last couple of days, getting near overbought. It eased off a little bit in the after, but that's the start of the new day. That's really not going to reflect too much. But we're at potential flip point there. We've also seen a little bit lower shakeout. However, you not dipped yet below the yellow line. Now that could start in the pre-market and begin from there. Doesn't look all that threatening at this particular point. Again, we were saying before that we needed to be in that 24.85 range to really kind of propel things towards the 25. Being stuck in this limbo is not horrible as long as we had the cyan below the red. Clearly, it's an indication that some short activity as well as some short-term sellers have popped into the equation just a little bit. It's a little catastrophic at this point. Yes, of course, there's chicken littles everywhere. Sky is always falling, but practically we don't see that from economic numbers, so no reason to suspect that that's the primary case. It doesn't mean that you still can have 15, 20 point drop that represents like a very tiny fraction, and people will start screaming from the top of their lungs. It's been a slow, steady move. Consolidation after this kind of a move is a little bit normal, and even 50% retrace into the backside of it would not be inappropriate. That's just a normal wave action. The really support factor here has been the euro. I mean, now at 1.6.5, it's a huge move. This is over 10 cents now from low areas, and so that's a significant bonus to a lot of companies that are going to report favorable currency changing. And bond rise is an indication that the stagnation in American politics is really going to put some complications into the Fed. Whether that they can be as aggressive in continuing to raise rates under the circumstances doesn't look probable. It doesn't look like there's going to be tax cut or even healthcare reform. And if that's the case, then everything that they've been talking about for the end of 2017 is not even likely to be in place before 2018, even if that were the case. So this pushes the likelihood of any agenda movement almost off the table. I mean, you're literally getting to a point where practically nothing will get done before the next election, which shocking, given the fact that they had control over the situation and pretty much let it fall apart. And oil, likewise, we talked about this for how long now? This move coming back here, we expected us to come back to this point, but we were also looking for it to fail in moderate terms. It just could not produce any momentum, and sure enough, started to fade a little bit here. We also had steel dipping below cyan, and that exacerbated the move, and we would expect it to come back to, right back down to lower levels. And they're starting to make a little higher case for building, but again, anytime you're going to get any pushback, even towards the USO here, towards 10, you can be met with resistance because supply is going to increase, and there's just a dramatic amount of that out there. And so, the only thing that we're really going to see is when supply start getting eat up by demand, um, not through reductions in production and things like that. That's going to tell us that the economies of the world are taking off, in particular in the U.S. And gold. This is a normal rebound that we were expecting from what we were seeing the dip below with the orange at the number 2 level started to carry forward. We like following on the ABM here and still maintaining itself. rise. Might get overbought here and there and have a little retrace, but it's going to be in demand, no question about it. People are going to have a hard time with some of the currencies. So we had the brief press up going, and we ended up right back at the peaks. And as usual, they tried to get back up to the highs after dipping. All we did was fill in some positive extremes from before. Took out the lows from the previous. I'll make sure we got a little bit, so it's a little clearer what the action was. So these were the lows from before. We still had some positive extremes back on the initial upfront going back here that just filled in a bunch of those. But you would still expect the attempt was to return back to the high, which is usually the normal place. Coming off the lows, I'd be looking for that buy as well for that push back up. Didn't quite get there all the way, but it got pretty far, given where things had declined to. Some of that back and forth you just have to expect, um, especially as we head in here till end month. And I think we're going to start to see probably a little more aggressive activity, I would guess, from shorts now, especially since it's clear that the agenda is dying, and now you're left with just regulatory control. And then there's obviously potential surprises with the special prosecutor, things like that, um, creating all sorts of random turmoil. So we're going to get a little bit more of excitement here going into August. The dog days could actually generate some kind of activity that makes me, throw things into a little bit more of a bigger spread of volatility, which is something that people have been avoiding, and I think we're due for that to come back now because only in the volatility are real money going to be made because you can shake out weak hands, and it's looking like more and more investors are fully invested, and as that gets to the place, it makes short opportunities more attractive as they get shaken out on the particularly third leverage. So we'll see how it plays out, but we'll just follow the indicator readings for now. And right now, everything's still looking okay, but I think if you get back below these lows in the 2460 range, then you're going to have to be a little bit more cautious with especially seeing the DOC spread on the daily. There you have it. As always, trade well. We'll talk to you later.